Gold futures dipped below $3,400 an ounce after a two-day rally on news that China and the U.S. confirmed upcoming trade talks, easing the demand for safe haven assets. Gold futures declined over 1% after surging nearly 6% over the previous two trading sessions. The dollar index climbed against most major currencies, while investors shrugged off the escalating tensions in Southeast Asia, specifically between India and Pakistan. China also expanded its gold reserves for the sixth straight month in April, adding about 70,000 troy ounces. The country's gold holdings have climbed to close to 1 million ounces over the last 6-month span. We've seen central banks increase their gold purchases significantly since 2022, with China gold reserves estimated to be around 8% of its total reserves, well below the global average of central banks holding about 20% of their reserves in gold. Now, looking at trade talks in the Fed in focus, U.S. Treasury Secretary Scott Bessent will travel to Switzerland for trade talks later this week to meet up with China's vice premier. The Federal Reserve is also due to make an interest rate decision, with policymakers expected to keep policy rates on hold. Fed officials have emphasized the need to wait and see how the trade policies will affect the economy. Now, shifting to industrial metals, we're seeing copper fall over 2% and silver as well after we saw the People's Bank of China, they cut the 7-day reverse repurchase rate to 1.4% from 1.5%. This cut was well within the expectations, where investors were looking for more stimulus to boost consumption of the industrial metals, where demand in China has been slowing.